Welcome back to another great episode of Franchise Fit Podcast. And guess who I have? Yes, my CPA finally makes an appearance on the podcast. And what better time? The end of the year.
Up next.
I don't want the IRS getting mad at me, okay? Rent my home at guardiancpa.com. Shoot us an email, mention Lance, you'll get $250 off. We'll be happy to lead you through this process.
And I guess the number two mistake, or maybe it's the real number one mistake, is they never called you in the first place to get advice when they were in trouble.
That's true. You get a major in business, major in accounting, because that's the language of business.
This episode's sponsored by SEO Samba. Empower your franchise with predictable results and AI-driven marketing. So Sam Miles, welcome to the podcast, first of all.
Thank you, Lance. I really appreciate it. This is fun.
Guardian CPAs. So Sam, what's the easiest way to save money on taxes between now and the end of the year if you own a business?
Just the easiest way is the Augusta Rule. That's where you rent your own house out to your business so that you can have your corporate meetings and discuss reasonable compensation and other things that you should be documenting at the end of the year. And to do this, you can get a king's ransom, if you will, like a high VRBO rate for a 2-week rental of your own personal residence. And it comes to us from the Augusta, Georgia Masters Golf Tournament because those people lobbied Congress and got this exclusion into law. So this is a completely legal way to do it. You just got to make sure you get your documentation right and your ducks in a row. And we have a great way to help people do that. If you want to go to rent my home at guardiancpa.com, shoot us an email, mention Lance, you'll get $250 off. We'll be happy to lead you through this process and get you started.
I love it. Kicking right off with a good tip for everyone. So Sam, you know that in the world of franchising, I work with a lot of first-time business owners. What are the top 3 questions that a first-time business owner should be really looking for in a CPA? Or what are the questions they should be asking you to make sure it's a good fit?
That's a great question. I always look at them and try to understand where they're coming from and what's important to them, because we all have our own values and beliefs and things that we hold dear to us. And by understanding that, I think you can find the best CPA for you is to find somebody whose values and beliefs align with yours. So whatever is important to you, if you like to invest in real estate, get a CPA that's great in real estate. If you like the stock market, find one that geeks out about that, because there's all kinds of people out there. You got to find the right person that matches with your intentions, your moral and ethical code as well, because those vary in people as well. I think those are some of the biggest key pieces.
Sam, what's the number one tax mistake that puts new business owners out of business?
Oh, there's a lot of reasons why businesses go out of business, but when it comes to taxes, what I've seen new business owners make the most common mistake is when times get tough and you have the bill to choose not to pay and they choose their payroll taxes instead of their rent or something that's going to have a more immediate consequence, but they're holding those funds as their employees' wages, and those funds are held in trust, so they're held to a higher standard with the law. So by using those funds for any other purpose after you paid them to your employees, that's a crime, and they go after that very severely, and they don't leave any stone unturned. So that would I say would be the number one mistake.
Well, and I guess the number 2 mistake, or maybe it's the real number 1 mistake, is they never called you in the first place to get advice when they were in trouble.
That's true, Lance. That's true. That would be number 1, because everybody should have a CPA or at least have a background in accounting if they're going to be running a business, because you know it's interesting. My dad gave me this counsel a long time ago. I was a chemical engineering major for 3 years before I switched to be an accountant. I went and did an internship, and I'm like, oh, this isn't for me. I won't be happy doing this the rest of my life. And the guy that got me the internship is a great guy. He was the CFO of this place, and he's like, you want to work in my office last month? And I'm like, air conditioning? You bet. Because we were out in the warehouse doing tests and stuff. And in the process, I helped him with his sales tax audit. And because I know statistics. My dad's a nerd, I'm a nerd, my dad's a CPA and an attorney. And so when they're doing the audit, I told him he was applying the statistic sampling incorrectly, and it changed the assessment from $56,000 down to $2,600. And then when we met with the manager was like, hey, he's right. The CFO had kicked me in the shins during the first meeting, so he was pretty happy with the answer. And he's like, go home, change your major to business. So when I came home, I had a heart-to-heart with my dad, and I'm like, Dad, what should I do? And he's like, if you're going to major in business, major in accounting, because that's the language of business. And I know how important language is to me because it's conveying our thoughts and feelings in a way that other people can understand. And I'm like, well, business has a language too, and it's accounting. So you really need to understand it or have somebody that can explain it to you so that you can understand it until you do understand it. I would say that's probably a core thing that everybody needs to know.
So we're talking about business and accounting. And one of the other big things besides finance and numbers I hear from first-time business owners as I'm matching them up and fitting them to their appropriate franchise, a lot of them get super concerned about marketing. So here's the question. What's more dangerous? Is it bad marketing or really bad accounting or bad bookkeeping?
Oh, well, this gets into a difficult area because I'm an accountant, so I deal with concrete things, and then we talk about marketing, and it's voodoo witch doctor to me. So with that being said, like I am meeting with you today, right? Trying to do some marketing. So
Yep.
I say bad marketing dollars spent. Most franchises make you spend a franchise marketing budget with them and then in your local markets anyways. Learning how to pinpoint that marketing, I think, is a very key point, and there's a lot of tools out there to help us handle this witch doctor stuff if we don't understand it, and I think it's about time we embrace that.
Yeah, good answer. So regarding the setup, most franchise brands that I'm aware of, and I know you've experienced this, Sam, most franchise brands give a certain general ledger or a GL or chart of accounts for franchisees to go by. So if they're in home services, I know you do a lot of home service brands, you do restaurants. If there's a chart of accounts that breaks down food costs of chicken and bread and oil and all these things, you got to love that because at least your customer, your franchisee, so to speak, will at least be able to get some numbers from other franchisees to compare and contrast to understand really how they're doing besides just bottom line profit, because you probably have people that have fat profit margins, but there could be franchisees that are doing even better, right?
That's absolutely correct. You know, man, I need to get in touch with this gentleman and get his permission to mention his name because he should have credit for this. He taught me more about financial statement analysis than anybody ever taught me in college. And it was in my first job, and I was a lowly bookkeeper working on Krispy Kreme. And this gentleman had a number of franchises, and I did his work. And actually recommended he opened a store by a college that still to this day just prints him money. So happy for him. And he taught me how to read financial statements. It was interesting. Week after week after week, as he asked me questions, and I'd have to go find the answers. I didn't understand why until he asked about these paper costs in this one store. And he said, something's off here. My paper costs are high and my revenue's down. I think people are stealing from me. I'm going to install some cameras. And I'll be danged if the week after he didn't install those cameras, those costs fell in line. And they were only off by 0.01%. Like, that's how well he knew his numbers. So the chart of accounts are there because the franchises knows their numbers. So you can use it. Then you may not know your numbers right away, but as you get better and better with your business, those numbers will become to tell a story to you that you'll just look at it and see. You know, it's kind of like that big stock trader, what's his name, Warren Buffett. He says he does things based on the way he feels after he reads things, kind of like what the guy, the Malcolm Gladwell on Blink said. You know, you do things on instinct. Once you hone yourself to know things, you got to trust those feelings. Like, they're more likely than not true.
Yeah. No, it's great, and obviously the appropriate financial statements are truly your dashboard that you can look at on a daily basis, especially hot item type inventories, labor. What are the biggest costs for everybody listening right now? Labor,
Right. So labor
your whole
probably,
team, and your
labor, rent,
supplies, and your inventory.
labor, rent, and interest. Never sleep.
Exactly. But what can you control on a daily basis?
Right. That's the key. So finding your key performance indicators, and every business is going to be different. And that's something you need to know as well. So these franchises might even direct you to certain accounting firms. You might want to start there, but you might want to explore other options with somebody that works with you better too, because there's reasons that they send people different places. But sometimes those reasons don't always pan out. They might be financial instead of because they're helpful. So make sure that you do your own due diligence in that.
You know, people panic when they get a business. The first thing they think of is, all right, I need an accountant. Let's hope they think of that. Maybe a bookkeeper as well. Then they worry about getting audited. What is the surefire way to get audited as a new business owner?
Well, I want to say prepare your taxes yourself, but that's not fair because some people do a great job. But I would say, like, having a preparer that doesn't know what they're doing. Maybe you went on the cheat because it's your first year in business, and you look at your financial statements. If they don't make sense to you, like if you have negative numbers where they should be positive, that's a good red flag to go find another place. That's actually happened to a couple of friends of mine before they found their way to me. So it's more common than you would ever guess.
Yep, crazy. So you and I had this discussion a while back because I started and I had an LLC. And at some point we shifted and I have an S-Corp.
Yeah.
Why are people switching too late, and how do you know when you should be switching?
That's a great question. I have my rule of thumbs, but they're based on how I feel, based on my values and beliefs and morals and ethics. Until you're making $50,000 to $75,000 net taxable income, I would just leave it on your Schedule C because you should pay some Social Security and Medicare tax, and that's a living wage. But once you get north of that, well, now you have a business, and you can pay yourself for working in the business, and that's taxed with Social Security and Medicare tax, which is 15.3%. So you pay yourself a reasonable salary, say half of what you make for a benchmark right now, but that gets into reasonable compensation, and that's something the IRS is starting to look at as well. So you pay yourself a reasonable amount until you're up to where you're making what you would pay yourself if you're working in your industry instead of running your own business. And then you can look at paying yourself a little less because you're probably doing more administrative work than you are doing your work in your business now because you've grown a business. So you might need to look at that as well. But that's my benchmark, $50,000 to $75,000 net taxable income.
So statistically, LLCs, or let's put it this way, S-Corps are going to be audited less than LLCs?
Okay, I know what you're quoting here. You're quoting my statistics I had years ago. I don't want the IRS getting mad at me, okay? So what I've been told, what I've read in the publications is, statistically speaking, and this used to be, because IRS is changing right now, and that's something to take into consideration too. Like we're not the only ones starting to use AI. We're not the only ones sharpening our tools. They're getting better too. So that's something to be aware of as well. But 1 in 10 Schedule Cs get audited because there's more abuse there. People are writing off their vehicle and throwing in home office where there's no home office, or their kid's bedroom is not the home office. So there's abuse, and they know that, so they audit it more. On S-Corps, because now you've clearly got a CPA and got educated, and you're figuring out this better tax platform to be in, they're assuming you're following more rules. So I would say 1, maybe 3 in 100 get audited. Because my experience has been, maybe 2 or 3 of the S-Corps I've ever prepared in my whole career have been audited. So again, but you do your work right. When you get audited, it's not scary. It's something you just have to deal with.
Sam, should first-time business owners even try to be their own bookkeepers?
Wow. Depending on their background. All right. If you have some background in accounting, maybe you've done some AP, AR, your wife has, that's possible. What I would highly recommend someone doing is find a bookkeeper that's willing to teach you. Maybe you pay them a little more than their hourly rate if they did their bookkeeping for you, to teach you this. Because, pay them more than that because that's what they charge to do it. If they're going to teach you how to fish, you should pay them a little bit more. So I would find a good bookkeeper that's willing to do that. That would probably be the best way to do it. Maybe reach out to your CPA and say, hey, who do you know that could teach me some QuickBooks that wouldn't mind earning a few extra bucks? That would be the best way to learn it, if you wanted to tackle it. But that's a loaded gun. You do it wrong, it's hard to fix. It's going to cost you a lot more. So if you don't have the bandwidth to take it on, don't just outsource it. Like, you'll make more money focusing on your business than what you'll pay a bookkeeper to do your bookkeeping. That's what I think.
So your wealthy clients that own businesses, what do you notice that they do differently than people that are really struggling?
Wow, that's a social economic question if I've ever heard one. Let's just start that by saying the failure in America is not at the schools, it's at the kitchen table. That's my opinion. And people that are wealthy had parents that learned and studied about money and then taught it to their kids. We don't learn money at school. Like, I learned it at the hands of my father, and I thank him every day for it. And so that's probably the biggest thing, is I see them teaching their kids about money at a younger age, making them responsible, making them have consequences, making them have choices, and let them have the freedom. Oh, this was hard for me to do, Lance. My daughter once wanted to buy a toy, and I just thought it was such a waste of money, but I made a deal with her, and she held my feet to the fire, and I had to go buy this wasted money toy. But I let her do it, dang it, and I think that's how you learn.
At the end of the day, she got what she wanted, which is what daughters get. That's okay.
Yeah, they know how to work, dads.
I knew that was a tough question, and I asked that question specifically because I know you work with a lot of independent business owners, some very successful, some not as successful, and then you also work with franchises. And what I love about the franchise arena is I show people only my top franchises. But I still do know they all still need a great accountant and bookkeeper. And in some cases, speak to those folks. So if I get somebody into a franchise tomorrow and I send them to you, what is that conversation like? Because, you could provide the bookkeeping and the tax advice and everything. And I have some notes here. It's really all about tax strategy. It's about cash flow. It's about growth planning, right?
Yeah, it's all of that. Well, to the extent you want to grow, let's be honest, like, we all get what we go after. You seek, ye shall find. I do believe that. So wealthy clients and less wealthy clients, to me, there's a lot of similarities. If they're happy, they're happy. Like, they're getting what they wanted out of it. If they're not happy, maybe they're not putting their priorities in the right place. I don't know. But that's one of the things, is what we define as success and wealth. Even wealth, like, we say it's money, but like, I look at some people that maybe they're modest jobs, but the quality and the wealth of their life is dripping gold. Like, so what do we call wealth? And what do we call, like, finances and tools to get there? So when I look at wealth, that's how I see it these days. I look at the guna, the quality of that soul, and how happy they are, because that's what wealth is to me.
You brought up something really interesting about scaling. There's a lot of franchisees I know that are perfectly happy making a couple $100,000 a year, and then I have other guys that are super excited to get to $1 million in income every year.
Yeah,
and
I love
always,
that.
yeah, and I always tell the guys that want to get to $1 million in income a year, boy, it's actually a little bit easier because you already have employees. You're already putting in the same amount of hours a week. It doesn't usually get tougher for you, But when you're looking at financial statements and you're talking to your proactive clients, because I know with some clients, they don't want to bother with you on a regular basis because they're running and gunning all day and they call you when they need you. But then you have other clients you're extremely proactive with to make sure they're on course to hit their goals, correct?
That's correct. And that's just to the level of service and what people are willing to pay for as well. And what they find value in, because if they don't find value in it, I don't want them to spend the money. So when it comes to that, some people don't need as much attention as others. Like small mom and pop shops, once you dial in on your key performance indicators, you know your business. And you just need to talk to me whenever you have a problem or something quirky that you don't know how to record or how to handle. Maybe you have an IRS notice. We'll help you out with that. No problem. So we can dial up our services or dial them down based on what your needs are. But the more involved we are, like maybe they want us to take on more of a CFO role, but they're not ready to hire a full-time CFO. We have a number of clients that I work with like this, where I go in monthly or maybe even once every other week. So just depending on what level of help they're looking to have, how big their businesses is, how spread thin they are as well, because that's part of it too, because maybe they're giving up the hat of being the CFO to be the CEO, but they don't know how to hand it off yet. And that's where we can step in and give them a little extra help.
So a lot of people listening that are first-time business owners, first-time maybe going to be a franchise owner, they struggle on the financing side in the beginning as to how they should fund their franchise. And obviously SBA loans are a big piece, but a lot of people seem to get confused by these 401k rollovers, also known as the ROBs, rollover business startup loan. And I have quite a few people that do those, setting up a C corporation, working with a third-party intermediary to set up your new retirement account, and you're essentially borrowing against that. What is your thought on that? I mean, if that's the only option, you use it, right?
Ooh, I would use it with care, because this is like your last, like piggy bank that you're got to go to the well to give it a shot, right? So Use it, but be very, very careful. Like pick the right franchise for you, please. Don't pick one that you love. Pick one that you know you're going to make money at, okay? I know we all have passions, but if you need the money, make the money. If you have the money, go for your passion. You bet. Let's do it. That's probably number one. So the ROBs, we're familiar with that. They actually work out really well. I'm in the process of helping a couple clients buy their company out of the ROBs because it's done so well. And how neat is that? They're like, wow, I don't want this money in my qualified plan anymore where it's going to be taxed again. Let's get it out of here so I can own it and flip it to an S-Corp. So I can take advantage of paying myself less money and not having to pay Social Security and Medicare tax and not having a double layer of taxation because it's a C Corp. So some of them have been great. Some of them I tip my hats. I'm like, wow, that's amazing. Like where you're at today just blows my socks off. Like, good for you. That's what I'm fun to see about my job. I get to see how so many people figure out how to do so well and live good lives. Like, it's wonderful.
Sam, you've been a great guest. It's a perfect way to end it because I love what you just said, though, in that answer. Don't find what you love. Find what you're going to make a lot of money at.
Yeah. If that's what you need, then do it. If you don't need the money and you love a franchise or a particular product and you want to bring it to someplace new, then go do it. But just know what you're getting into. Make it a personal charity that you get to write off a little bit of tax stuff. No problem.
Well, and that's why you got me to find you the right fit. Sam,
right.
we're gonna put all of your information in the show notes. You already gave some info at the very beginning when we kicked this off. And thanks again for being here.
My pleasure. Thanks for having me, Lance. I really appreciate it.